surrounding yourself with the right individuals. You can't go at this alone. You can't operate in a vacuum. You get exposure to the right ideas when you surround yourself with the right people.
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and the wisdom of how they sold their first million.
How would you like to make your first million? And today we have Jeremy joining us from Silicon Valley, California, a business coach and a serial entrepreneur. So Jeremy, tell us, what are the 5 steps to make your first million?
That's a really good question. And I love that you look for the structure there, right? One of the most important things you'll hear come up again and again in my stories and the stories of the folks I work with is surrounding yourself with the right individuals. You can't go at this alone. You can't operate in a vacuum. You get exposure to the right ideas when you surround yourself with the right people. But what do you do from there? So you're hanging out with the right people. You need to make sure you're asking good questions and be really open to the feedback. Once you've got that cycle running, which you and I can talk, we could talk for days on that, right? Then we got to take action on that. So figure out what is your MVP, your minimum viable product. So often with our mastermind members and clients, there's this challenge of having a big idea and wanting to have the perfectionist approach for the perfect product to get to the market someday. But we don't want to wait for someday. We want to get you to market as soon as we can with the minimum viable product that can deliver value to your customers to the point they're willing to pay you for that. Then you can start iterating, snowballing, and growing it from there. So that last and most important piece is number 5, which is launch and then iterate quickly as you continue product development and learning from your failures with a short recovery window from each one of those lessons learned.
That's fantastic, Jeremy. So tell us, today we're going to talk about a little bit about the startups, yeah? And especially in technology. There in Silicon Valley, you guys have a lot going on. So we have, this is what happened with the, usually with the tech startups, right? So we have usually the situation that we have software developers developing a product, and they think that this product is gonna save the world, right? That this product can save the problem. So they put all the energy, all the time, all the money, all the effort, and create these bulletproof products. And then, then we go into the most challenging step, which is a product that that the team thought that it was ready to take to the market. The team thought that this is what the client is going to buy, and then when you bring it there, it's almost impossible to make this product market fit. So yeah. What advice, Jeremy, do you have for, and this happens a lot, I think 98% of all the tech startups fail. It's just because they're failing to do it backwards, exactly as you described, yeah? Put as little as energy as possible in this minimum viable product. Try to find, to listen to your clients, to see how can you make this product market fit. So what are the advice, Jeremy, that you have there for tech entrepreneurs, software developers? Actually, in this podcast, 1 out of 5 people that we interview roughly are tech entrepreneurs. They are, so which is say the other ones are real estate. So we can draw the conclusion, right, that in tech and real estate, you can make a lot of wealth, you can make a lot of money. It's saying in this broadcast, because often they come for to participate, right? So yeah. Is there really so much money there? And just it's a lot of money only for the people that they know what they're doing, and actually these ones are very, very few. Yeah. And
so what's interesting?
What is it?
Yeah. So I have experience in both of those industries you've touched on, so I can speak to those. What's interesting is the technical founder that you're talking about. Even before we had software or SaaS or any of these kinds of things, that same entrepreneurial archetype existed forever, right? You think about the idea of the inventor who creates the better mousetrap. Same idea, it's a creator, someone who's building a product, whether physical, right, or digital or anything in between. So the problem I often see, and it's so sad, is you have a product person who wants to create the perfect, most amazing product the market has ever seen. And they spend all this time in the lab, whatever that is for you, right? It can be tinkering in the garage if you rewind back a few decades. It can be typing away into the night on the computer, right? Creating the most amazing product the world will never hear about. And that's so sad because we know how much time and energy and effort has gone into that. Meanwhile, the market's moving on. The competitors who have ideas but are getting them to market are selling to the market that could have been buying your better product. So let me pose this question to our listeners. Listeners, what's better? A product that you've launched that people are buying that maybe isn't perfect or is only in its first version? Or a perfect product that you invest years and a lot of money into that no one ever hears about? Right? So this all comes down to launching your MVP, your minimum viable product, in whatever that can be. And a great place to get these ideas and get the early feedback is sometimes behind the closed doors in a mastermind setting. Most of my businesses have launched from ideas and conversations I've had behind closed doors with others. Many multi-million-dollar businesses have come simply from a back of the envelope idea, spitballing it around with the right group of people, seeing heads nodding for people saying, yeah, I would buy that, and getting an MVP to market with paying customers right from day one. If you can launch a business without taking on external funding and bootstrap that and grow that,
absolutely,
snowball what you're selling into growth, you're in a much better position than going around with pitch decks and ideas and theories for months to years, hoping someone will give you money and that your idea will actually get traction and attract customers.
Yeah.
Prove it out and then build from there.
I thought that was a very bad habit, but do you know, from all the business that I own, I never find investors. I grow them. I did one real estate. We managed to sell over 5 million. And yeah, we bootstrap. So we make the profit, we make some money, we reinvest it, we grow the business, we make some money, we grow the business. And all the businesses, those ones that have done well, also those ones that collapse,
we learn from those, right?
They all, I never seek for investment. However, I agree that with the good money comes and the right investment come into play, it can be a huge accelerator in terms of business growth. Sometimes it's more important people with the right connections. What do you think, Jeremy? What is more important?
I think, success can almost be a dangerous thing, right? If you don't know anything but, your one unicorn idea that worked really well, you don't yet know how to fail and learn from that and iterate. So if we go with the assumption we're all going to make mistakes, we're all going to have ideas that don't work, is it better to take a long time to slowly fail and then iterate? Or would you rather fail early and quickly learn and iterate and go from there, right? So we want to fail. If we're going to fail, which will happen, we want that to happen quickly. We want it to happen with as minimal impact as possible. And we want to learn from that, recover and iterate quickly. So if I may, can I share a story sort of one of those businesses?
Good. Yeah, please.
Yeah. So almost every business that I've ever had, and a lot of our clients' businesses and Mastermind members' businesses have followed a similar path. And this is for our listeners who have businesses, might sound familiar. As entrepreneurs, there's 3 things we do really well that I think the rest of the world doesn't. And these are 3 things that happen in sequence. First, we see a gap in the marketplace. We see a problem. We see something that is not right in the world. Others have the blinders on and don't even see it. All right. So you see there's a problem or a gap in the marketplace. The second thing that us entrepreneurs do really well is we see a solution. We have an idea for how we can solve it or do it better than anybody else. Right? Not everyone can do that, even if they see the problem. Right? Some people see the problem and the gap, and what do? They complain. Well, that's not very productive, right? Mm-hmm. Us entrepreneurs, we see the solution to the problem. But here's the critical one. Why we all on this call have businesses and others don't. We then actually take action. We see the problem, we think of a solution, and then we actually launch a business and do something to sell that solution, right? So in one of my earlier businesses, we saw a gap in the marketplace, and we realized there was a need to do some training around a certain topic. So we decided, before investing really much of anything in this, to test the idea out. So we went out to our list and we promoted a live course date. We were going to run a course on a certain date on a certain topic. So our investment at that point was a sales page, right? And a few emails. And what do you know? People were signing up and they were buying from us with real money registration for the event. That's a really good signal. That told us that our idea and our message were a match for our market. And we were getting real money in the door for something we'd not created yet. Now, we committed to a date we were going to do it, and we knew what the rough structure would be, but we hadn't created a whole course. We hadn't signed hotel contracts. We hadn't signed an AV bill, none of the stuff. Just had the idea, sales page, got traction. All right. So next step is we start putting the course together so we can get up to that event and actually deliver on this. We follow through. Now, you might be wondering what happened if no one signed up? Well, nothing lost, right? Or what if only a few people signed up? You can cancel and refund them, right? This is all very low risk, very low investment for everyone. You're testing the idea out. All right, so we have our live event coming up. We've now signed the contracts with the hotels. We've now signed the AV contracts and the catering, and we are able to put together the course binders for physical materials for the course and so on. And we then go to test our next thing. The actual day of the event, when people are in the room enjoying the course, we float out the offer of, hey, do you want also a digital copy of like the recordings from this event as well? That was an add-on upsell, which if nobody bought, no harm done, right? We had a successful event. It was profitable, all was well. But what happened is a good percentage of the room bought on additionally to buy a digital copy of the course. So afterwards they could go back and watch the replays and review it again after the live event they went to. All right. So that now funded the editing and production costs to create the digital version of that course. And we also now had additional sales with the same customer base. So we are then able to take this new product we're launching, the digital version, and sell that out to the list to the people who couldn't join us or wouldn't join us in person and so on. And wouldn't you know, we had follow-on sales that came from people who bought the digital version of that course. Good. Success again, right? And those sales funded the production of the products to then fulfill. So then we went on and sold the digital version of this further out, and we worked with some affiliates to sell this to their list. Well, the first presentation we did completely flopped, like goose-egged. We had someone put out and promote our course to their list, right? This is their marketing calendar, their good name, our presentation, and we did terrible. Ugh. Well, we know the product can sell, but we did something wrong when we changed up who we were selling to. So we iterated, we went out, asked good questions, sought feedback from those who were close to us, and revised the presentation and went back out to a different list and started doing well. And every time iterated and changed and changed and changed. So I could go on, the story goes on and on, right? But this was a launch of another multi-million-dollar business, all around testing an idea out, iterating on it, learning from the mistakes, and having minimal investment before getting a sale, which we could then use to fund that next step of growth, and always delivering on our commitments to those customers that came to us and bought. And so this is a process that any of us can use in our business to get that MVP out there, quickly get the feedback and iterate on it, all stemming from surrounding yourself with the right people.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.